G'day, Ziggy here, author of Money Does Grow on Trees and CEO of 3P. Today we're covering all things crypto, right? We're going to talk about Bitcoin, crypto. We're going to go through the basics of it in part one. Then we're going to deep dive into part two for those of you that are already experts in it. We've got an expert on hand today to be able to talk us through that. Now, our expert is Jonas Bonner. I say that right, Jonas?
Jonas Bonner. Yes.
Jonas Bonner. You need the accent.
Jonas Bonner.
Jonas. Okay, Jonas. I like Jonas. We'll use the accent.
All right.
You just sound smart, Jonas.
Well, I think that's the German accent. Like people, I feel like whenever people that aren't from Germany meet Germans, they instantly think that they're like 5 IQ points smarter than they actually are just because they have a German accent.
I was talking to a client this morning online she's an Aussie from Singapore, and we were talking about our accents and how the Aussie accent has that twang that doesn't normally lend itself to being smart. Although we are smart, but you Germans sound smart.
Aussies are smart. Yeah, but true. There's different English accent, and for some reason, the British accent always makes people sound smarter.
Yeah, that's right.
And they also tend to use really sophisticated words as part of their everyday language to just make stuff sound complicated.
Yeah, that's right. That's right. Well, welcome to the episode today. You are the Senior Quant at AMP and part of the investment team that manages AMP's superannuation portfolios. In 2024, AMP made history by becoming the first major superannuation fund to invest in Bitcoin. Has anyone else done it since?
Not that I'm aware of.
Not that you're aware of. Wow, that's interesting. So you're on that team there. Jonas is responsible for managing AMP's Bitcoin allocation and has led educational sessions about Bitcoin to various teams, obviously within AMP, and to board of directors outside of AMP. Jonas has spoken at international Bitcoin conferences and is usually lost somewhere deep down the Bitcoin rabbit hole, which is where we want to go today.
It's a fun place to explore.
Jonas, where have you spoken? What conferences have you spoken at?
So I spoke at Bitcoin Alive in Sydney in March of this year, and then I spoke at BTC Prague, which is a Bitcoin conference in Prague in June this year.
Yeah, cool. So obviously it's gathering momentum. So let's just talk about, for the beginners in this episode one, right? What is crypto?
I'll probably answer what is Bitcoin first, and then explain why I think Bitcoin and crypto are actually completely different things and why it's important to understand that. So Bitcoin, if I had to put it in plain English, is a new money that exists in purely digital form only. But it comes with a lot of benefits that our current money actually doesn't have, namely that it's controlled by no one, it's completely decentralized, it has a fixed supply, so there will never be more than 21 million. Nobody can be censored from this money, from using this money, and everybody in the world who has access to the internet has access to this money as well. So it's almost a more equitable, more fair version of money in the purely digital realm.
Okay, so based on the economic supply and demand, given that there's only 21 million, and we have 8 billion in the world, obviously not all investing or buying currency, doesn't that mean that Bitcoin naturally is just going to increase in price because of the demand?
I mean, that's the main thesis for a lot of people. I guess for Bitcoin, one of the main drivers behind its value is adoption. So how much people are willing to pay for it and how much they value the properties that it inherently has, which is that scarcity, like you said. There can never be more. We can always build more houses. We can always print more fiat currency. We can always find more gold in the ground, or maybe Elon will go up to mine asteroids one day, who knows. But Bitcoin is the only thing that we've ever had where we actually know how much there will be, and we know that there will never be more of it.
So why are there only 21 million Bitcoin?
Because that's how it's written in the code. Satoshi, who created Bitcoin, the number that he chose doesn't really matter. What matters more is that it's a fixed number, and that the number can't be changed.
Right. And Satoshi, no one knows where he is, no one knows who he is, is that right?
To this day, and I don't think we ever will, which I actually think is a feature, not a bug. That's what you say in computer science space. Yeah. It's a good thing, not a bad thing.
Yes.
And the other good thing is Satoshi technically holds 1 million Bitcoin. Because he was mining Bitcoin in the early days, he was mining lots of Bitcoin in the early days, roughly 1 million. But those Bitcoin have never moved, so he never even sold a single one of them.
So he's just sitting on them.
or he destroyed access to it for some reason. Maybe he just, like, Bitcoiners often talk about the immaculate conception with Bitcoin, because the way that everything happened from the start up until now is probably unrepeatable. And also everything that happened along the way, including Satoshi being completely unknown and never touching his Bitcoin, is super important and the only way that we could have gotten to this point. So yeah, I think it's incredible to think about that there's someone, I think when you look at the ranking, he's like the 12th or 13th most wealthy person in the world, technically. Never touched a single Bitcoin and probably never will.
But do you know of anyone that's ever met him?
No, and I mean, if people have, I don't know whether they would know, because he stayed so anonymous online as well. And he was what people call a cypherpunk, I guess. He was really into anonymity and security, and he probably, like, you couldn't track his IP addresses or anything like that. And if people would have met him, maybe they weren't even aware that it was him. And people that have met him are probably aware enough of how important it is to not release his identity that they wouldn't say it either.
Yes, or they meet him once and then maybe disappear.
Could also be. Who knows?
Maybe one day he's going to come out and he's going to say, "Hey, I'm Satoshi. Here I am."
But you know what the interesting thing about that is? No one would believe him.
Yeah.
Because how do you prove that you're Satoshi at this point? There are people that have come out claiming that they are Satoshi.
Yes.
And then I think in the UK or somewhere, there was a court ruling that this guy named Craig Wright claimed to be Satoshi, and they then ruled that based on a lot of evidence that he clearly wasn't Satoshi. And now he's the only person where we can all officially say that guy definitely isn't Satoshi.
Yeah, well, it'll be interesting, given that we don't know much about Satoshi, how you have evidence that he's not. But anyway, that's a rabbit hole we can go down another day, because he might come alive, he may not, but who knows? Okay, so that's how it all started. So tell us then obviously it's an exchange, it's a digital exchange, so I can buy things using crypto and I can sell, so I can exchange using crypto, right?
In some places you can.
Or Bitcoin.
And there's actually a pub here in Melbourne, for example, that accepts Bitcoin as payment.
Do they?
But most places in the world, as you're aware, don't accept Bitcoin. And you can't go to Woolies and pay with Bitcoin. In Germany, you also can't go to the supermarket and pay with Bitcoin. In Switzerland, there actually is a supermarket where you can do that now. But in most places in the world, it's not what economists call a medium of exchange yet. So economists, when they talk about money, they usually mention three critical functions, which are medium of exchange, which is what you're talking about, which is that you can use it to pay for goods and services. The second one is a unit of account, meaning that goods and services are priced in it. And the third one, and this is a really, really important one, and probably the most important one, is store of value, meaning that it retains purchasing power over time.
Yeah, right.
And when you look at the history of money, one thing that you'll notice is that apart from fiat currency, which we use nowadays, which the government essentially introduced and then forced us to use, every money that we had before then, which naturally arose by free market competition, by being chosen by the people, evolved in the following way, which is that it started off as a collectible. Then once enough people collected it, they started using it as a store of value as well, to store value, to exchange it for labor that they had provided, or maybe a deer or a mammoth that some cavemen had caught or killed back in the day.
Yes.
And then once enough people used that medium, whatever it was, could be seashells, could be salt, could be cattle, could be precious metals at some point. Once enough people use it as a store of value, its purchasing power increased. And only once that stabilized and enough people held it as a store of value did it become a medium of exchange. So a lot of people wonder about Bitcoin and say, oh, but I can't, how is Bitcoin money? I can't use it to pay for my coffee yet. What they fail to understand is that before it actually becomes money in that sense, in the medium of exchange sense, it needs to be a stable store of value first. That's how money has always monetized.
So it's not stable at the moment. Is that because of its volatility, right? It's not stable enough for people to be confident in it to exchange and buy something today, knowing that by the time I get back home, the value is still the same. It hasn't dropped by 50%.
Exactly. And also for supermarkets. Like if they were to offer products against Bitcoin, and then, I don't know, you buy your eggs with Bitcoin one day, but then the price of Bitcoin drops by the next day, then Woolies just lost a lot of that value that was sitting in the eggs, technically.
So is it fair to say that Bitcoin, given that there's only 21 million, will never become the dominant exchange?
No, I don't know.
No?
I don't know where you draw that line from one to the other. I think it actually could, and over a long enough time period, I personally think that it will, just because it has the best monetary properties. And another thing that you learn from studying human history and monetary history is that the money with the best properties always wins over a long enough time period. That's how we ended up with gold, because gold was better than using seashells, better than using cattle, better than using salt or other things that people were using as money. It had the best monetary properties. And one of the key properties that made it better was that it's harder to inflate. It's more scarce. Gold is really hard to find and then really hard to dig out of the ground. Whereas seashells, you just need to go to a beach and you can collect millions of them. It's nothing. And for Bitcoin, again, the scarcity that it has is better than any other form of money that we currently have. It's just that this is such a new form of money and people don't really understand what it is. I mean, if you walk around, even if we walked around in the office here and asked people what Bitcoin is, I don't think anybody would answer that it's a store of value or that it's really money. It's maybe something that they see as an investment or a speculative asset or something like that.
Yes. With shares in a company, if you look at the list of shareholders in the company, you can really see who the shareholders are and which countries own shares in large corporations. Those 21 million, are we able to see anywhere who owns what, or what, at least what demographic or what countries have the majority ownership in Bitcoin?
I mean, it's hard to see where they are, but there's a lot of really good analytics firms that do on-chain analysis. So by using machine learning and identifying patterns between transactions, they can see whether it's an individual holding or maybe an ETF provider in the US like BlackRock holding the Bitcoin, Coinbase and stuff like that. But what we do know is that more than 50% of Bitcoin are still held by individuals and less than 50% by institutions. So people are always a bit afraid that now that BlackRock is coming in, or even Strategy, which used to be MicroStrategy, has bought more than 600,000 Bitcoin at this point. They own almost 3% of the total supply. That now the institutions are buying up all the Bitcoin and there won't be enough left for people. But most people who own Bitcoin are still individuals because they basically front ran the institutions. They bought and understood Bitcoin earlier.
Okay. Because that was my point before about the limitation of it. Is it going to become so major that if there's only 21 million and let's say in 5 years' time you have the institutions owning 50 to 60% of it and are holding it because they're investing in it, then how does it become a common currency form of exchange?
That's a really good question, actually. The thing about Bitcoin is that one Bitcoin can be subdivided into 100 million subunits called Satoshis.
No way.
Yeah, they're called Satoshis.
Satoshis, of course they are.
Yeah. So if you go on, let's say, CoinSpot.
More mystery.
Yeah.
Now we have one Satoshi, we still have, and now we're going into hundreds of thousands.
Hundreds of millions.
Hundreds of
Bitcoin.
millions.
And because there's 21 million Bitcoin, you did the math, 21 million times 100 million. That's how many
Sounds
Satoshis
like an episode of Black Mirror.
Yeah. But because you can subdivide it, like for example, if you want to buy Bitcoin, you don't have to buy a whole Bitcoin. You can buy small fractions of a Bitcoin. You can buy $10 worth of a Bitcoin, despite its price being at like 175,000 Australian dollars at the moment. So you can, and this is one of the key properties that a good money actually needs to have. It needs to be divisible. This was actually one of the problems with gold, that yes, it's divisible, but it's kind of hard to always shave off a little bit of gold from your gold coin if you want to make a small payment, which is why we were using silver as well for smaller transactions. But divisibility is one really important thing. Scarcity is the other really important one. Portability is also really important. You need to be able to send it across space really fast, which was another problem that we had with gold. That's why we couldn't use gold anymore at some point. When the world became super interconnected and trade was starting to be done globally over communications networks as well, where information can travel at the speed of light, but the money that we were using, gold, can't travel at the speed of light. It can only travel as fast as humans can travel. There was a disconnect between the speed of trade and the speed of the money, which is why we then introduced fiat currency, where banks were like, okay, instead of everybody running around paying with gold, we're just going to hold gold for you in a central location and we'll issue paper certificates against that gold that you can then use for money, but you can also always redeem for gold.
Yes.
And then a few things happened, and in 1971, after the Vietnam War, when the US was actually printing way more US dollars than the gold that they held, Nixon took the world and the US off the gold standard, and since then, fiat money has been completely decoupled from anything in the physical world like gold, and there's nothing keeping it scarce anymore because central banks can just print it out of thin air, essentially.
Right. Awesome. Okay. Well, that changes everything then. If that could be, if one Bitcoin can be split up into hundreds of millions, you said, right?
Yes.
Goodness me, that does change everything. Okay, now that makes sense because I wasn't getting it with the 21 million, but now that makes sense. Okay, so what about the guy that's been looking for his code or wallet, whatever? The poor guy. I don't know how many million. Did he have millions of? He had millions of Bitcoin, right? And then he spent money at this tip, trying to look for it. And I think he's had 2 goes at accessing it, and then if the third one is wrong, it's over for him.
I think the court actually a few weeks ago ruled that he's not allowed to search for it anymore, and the search is now officially over. But he was looking for it for the past 12 or 13 years. And I think, if I remember correctly, he had 8,000 Bitcoin.
Wow.
Which is like, I don't know, over $100 million right now. So yeah, I'd be looking for it as well.
I'd be looking for it too.
Sure.
Yeah.
But this is one thing about Bitcoin as well, is that because you can actually self-custody it in your own wallet, and because no one can create more of it, if you don't self-custody it in the correct, secure way and you lose access to it, that access is gone forever, which comes with a lot of personal responsibility. But it also, it takes the responsibility out of the hands of central planners that hold stuff for us and gives it back to us now, which is really beautiful because here in Australia, we're fine. In the US, they're fine. In Europe, they're fine. But there are a lot of countries where governments try to restrict access to property that people can hold themselves and have capital controls where even if you want to flee your country for whatever reason, you can't take what you own with you. Yeah. But with Bitcoin, you now have something where you can hold it on a small USB drive looking thing, or even remembering 12 words in your head. You can cross borders with millions in your head and nobody will ever know.
Wow. So no one can now, if he loses that, no one can access it ever again. That 8,000 is lost out of that 21 million.
It's like a donation to the rest of the network, essentially, because he's now made Bitcoin more scarce.
Yes, right, okay. Thanks, mate. Yeah. So why crypto? How did it come about? What's the interest? Why was the interest in it originally? And tell us a little about cryptocurrency and we know where Bitcoin fits in, but why crypto?
Before I answer that, maybe let's quickly make the distinction between Bitcoin and crypto and why they're different, because I think this is really important for people to understand. And it's so confusing because the media and so many people still just put everything in one big bucket called crypto. But Bitcoin, as I just said, really only tries to be new digital sound money. So kind of like gold was in the physical world, in the digital world, but with better properties. And that's all it tries to be, just really, really good money that no one can control and no one can devalue.
So Strudge is saying, listen, leave us alone over here. You've put us in the crypto bucket. We just want to be Bitcoin over here.
Exactly. Yeah. And then based on Bitcoin and it using cryptography and what's called the blockchain, a lot of people saw what it was doing and said, oh, blockchain, that looks like a good technology. Maybe we can build other things on top of that. And then things like Ethereum, Cardano, XRP, and other altcoins were created, but they all try to be very different things. They try to be the platform for decentralized finance or Web3 applications, or maybe the rails for stable coins, NFTs, and all those sorts of things. But they're all like tech platforms, basically. Like the way that I often compare that is that Bitcoin can really be compared to gold, but in the digital world, whereas all the other cryptos are more like early stage tech startups that try to do something in the tech space, but in a decentralized way. But if you think about what those two things are, they're very, very different things, and they're very different investment cases as well.
Because that's how the common person, that's how I've understood it, that crypto is the blockchain technology and Bitcoin is one of those. But that's not right. You're talking, the way you've explained it is something completely different.
Exactly.
Yeah, okay.
And one interesting thing to understand as well is that blockchain technology in and of itself, and this took me a really long time to understand, blockchain technology in and of itself is actually really bad technology. And this will surprise a lot of people. But what it essentially just is a database that's copied on many different computers all over the world many times over. So it's a really inefficient database. And the only reason why you would want to use something as inefficient as the blockchain is if you have such a strong reason to use it, like making money decentralized and out of the control of everybody, that you would sacrifice, or not sacrifice, that you would accept using such an inefficient database to do that.
Right.
And Satoshi basically, the only way to make Bitcoin work was using the blockchain. But he didn't use the blockchain because it's such good technology. He used it despite it being bad technology, because it was the only way to make decentralized, trustless money work.
Right, okay. So he used that aspect of it. You could be able to decentralize it.
Yes.
But that's the only part of it that he used.
Exactly. Which then leads me and a lot of other Bitcoiners to the question, do those other applications actually justify being run on a blockchain? Or could they, if they're not necessarily trying to solve something that needs to be fully decentralized, could they just be run more efficiently on a centralized database at cheaper costs?
Yeah. Maybe. So would you just keep right away from those other ones?
That's what I personally do, but I'm not a financial advisor.
Okay, this is not advice. This is general advice. Make sure you speak to a financial planner who will look at your goals and objectives, your risk profile, and make appropriate recommendations.
Yeah. And I think, the most important thing is that people understand this. If they then want to invest in whatever, that's still their decision, but they should make that decision from an informed standpoint and not a maybe uninformed one.
Yeah. I told a friend a couple of years ago who had Bitcoin. I think he still has Bitcoin, and we were we were grabbing some lunch, and he said, "Oh, Bitcoin is really going up. I can't remember 50%, whatever it was. It's going to the moon. It's going to the moon." I said, "Well, in that stage, I'd be selling out now. Now's the time to get out, because that's traditionally when traditional investments, if they go up too quickly and too hard, and then there's still talk of it going to the moon, it's usually not. This thing's still going."
Yeah, I know. But the thing is, it always has that phase where if you're getting in an Uber and your Uber driver is telling you that something's going to the moon, that's probably when it's that's an indicator.
Poor Uber drivers. But it's true.
You know what I mean?
It's true. I know what you mean.
So with Bitcoin, we've now seen many of those cases. There have been, I think it's been 4 or 5 bull and bear markets where it's gone up a lot and then it had massive drawdowns, 70, 80% most of the time. So, but what then always happens is it always recovers and it then reaches a higher high. And then at some point, there's too much excitement, too much leverage taking in the market, too much speculation, which then naturally must lead to a correction at some point. That's just how things like this work and how networks also grow. But the interesting thing about it is, like you said, it hasn't died. It always came back stronger. It's almost like, I don't know if have you read the book Anti-Fragile by Nassim Taleb?
I haven't, no.
It's basically the concept that he describes there is that if you think about what's the opposite of fragile, a lot of people would say robust. But when you think about what fragility actually is, it's that something breaks easily under stress. But robust just means that something doesn't break.
Doesn't, yeah.
But the opposite of fragility would then be something that's anti-fragile. That means that it doesn't just not break, it gets stronger under stress. And a lot of organisms in nature actually work that way. If some of the weak parts of that organism get attacked and die off, the organism as a whole will become stronger. That's survival of the fittest. That's how evolution works, basically.
Yes.
But it seems like a similar thing is happening with Bitcoin as well, where oftentimes something will go wrong. An exchange will collapse somewhere. China will try to ban Bitcoin and Bitcoin mining. Bitcoin has a massive drop.
Of course I do.
Everybody thinks Bitcoin has died, and then it comes back stronger. So it's almost like it needs these stressors, these stress points along the way to become stronger and stronger over time and grow into a more robust, more decentralized monetary network.
Yep. Okay. And so now, I just, as you were explaining that, I think we've found Satoshi. I think that's Satoshi.
I'm not Satoshi. I was way too young.
Well, we're never going to know, are you? May or may not be, but you're never going to know.
That's true. I can't
Satoshi doesn't sound like a German name, though, does it?
I can't prove that I'm not Satoshi, I guess.
Yeah, that's right. All right. So have you made any mistakes with? What are some of the mistakes that either you've made with Bitcoin or people have made in Bitcoin? Can you make a mistake?
I mean, yes, the biggest one is if you self-custody your Bitcoin and then you lose the hard drive that the private keys to that Bitcoin are on. Big mistake. The mistake that I probably made is it took me way too long to understand Bitcoin, and I was messing around with other cryptocurrencies during COVID.
Yeah.
But that was my learning curve. That was part of my learning journey. It got me to the point where I am now. So I'm grateful for it. And I think almost everybody who ends up being a Bitcoiner has an altcoin phase at some point as well. Mistakes that you can make, what people often do is they think that they can easily speculate on Bitcoin and just buy leveraged futures and do a 3x leverage or 10x leverage. You can even do 100x leverage, which is crazy.
Oh my goodness.
Because we now have this mentality everywhere in the world where everybody wants to get rich quick. It's like, if I hold Bitcoin, if I keep buying Bitcoin every month or every week and then I have to wait 10, 15 years, or same with shares or anything else. Yeah. I don't want to wait that long. I want to find the next Bitcoin, which is going to make me rich in 2 years. I only have to put $1,000 in and it'll turn into $1 million.
Yes.
And that's just the wrong mentality for everything in life. And in Bitcoin or in economics, there's a term for that called time preference. And the marshmallow experiment is actually a good example of that. I'm sure you would have heard about that, where some researchers gave kids the choice of eating a marshmallow either straight away or waiting 10 minutes, not eating the marshmallow, and then they'll get a second one if they've waited 10 minutes. Yes. And apparently they said that it was a good indicator towards how successful those people end up being later in life, whether they could delay gratification or not, which brings us to the concept of time preference. Time preference is basically how much you value the present over the future. And if you have a high time preference, you value the present very highly over the future. You're only living in the here and now. You're trying to maximize your gratification in the here and now. Whereas a low time preference means long-term thinking, planning for the future, being able to delay gratification, being able to make money grow on trees, and do all the things that you're talking about in your book as well, but that are important for building wealth over the long run.
Yes.
And everything in life that is really worthwhile requires this mindset, I think. If you want to be healthy and have a fit body,
absolutely,
you can't get that overnight.
Yes.
It has to become
look at your body. I want to look like you when I grow up.
You'll get there.
I'll get there. The Greek Adonis is on his way back. Yes. Okay, so as we finish this episode, or this part 1, tell me, how do I buy Bitcoin? What do I need to do?
There's a few different ways that you can do it. One of the easiest ones is to just sign up at an exchange. Here in Australia, CoinSpot is a big one, for example. There's Coinbase as well.
So they all safe? Like, I'm not going to lose my money, am I?
Most of them are very tightly regulated, so they're pretty safe now. Okay. But there have been cases where exchanges have failed or basically gambled with customers' money in the past. FTX was that case in 2021, 2022. But that's the beauty about Bitcoin. You can buy it through an exchange, but then if you want to, and if you don't want to have to trust the exchange to, not explode or go down, you can actually withdraw it from that exchange.
Transfer it to your wallet.
Onto your wallet, and then you're the one who's in charge of it.
Okay.
And nobody else can.
So I can always do that.
Yes.
Yeah, but in order to buy it or to sell it, I've got to go through an exchange.
Yes. There's technically ways that you can buy it from people directly as well. There's platforms online where they will match you with someone who wants to sell Bitcoin. Or, if you had a friend, you can also, if they want to sell Bitcoin for, $5,000, then you can transfer them $5,000. They send you a Bitcoin. There's another way. There's like peer-to-peer ways of doing it as well. But the official way is going through an exchange.
So again, if I'm starting with $100, I go to the CoinSpots of the world and they allocate me so much of a Bitcoin.
Yes.
Is that what happens? Okay.
Yep.
All right. I'm trying to get my head around that one, but that's interesting. Hey, thanks for part 1. I think that's been a good start to this whole crypto. I'm looking forward to part 2. Gee, I thought we were going to go deep. We're going really deep in part 2, aren't we?
We are going deep
in part 2. Look forward to it. We're going deep with Satoshi in part 2. Hey, thanks for joining us. We'll see you at the next episode.
It was a pleasure. Thank you.